All right, Daniel Ebner, man, I appreciate you being here. I'm at home today recording with you. This is great. Hear about what you guys do with real estate.
Great. Thanks for having me. Looking forward to it.
Yeah. So looking at your, oops, that's your PowerPoint. Let me pull up your website here. I was looking at that a second ago here. So you all do real estate, and that's going to be our next month of what we're studying in our class. So explain to me kind of what your company does.
Yeah, so we think of us as basically an alternative investment class. So we focus on real estate, specifically apartments, and we are what you call a sponsor. So we are the general partner in deals. We will go raise debt and equity, and our job and what our reason for being is to go buy a community, put a whole bunch of money into it with an effort to improve the quality of the property and hopefully raise revenues and therefore increase the value of the asset, produce a good positive investment result for our investors, and sell it, move on to the next.
Okay, so it's an apartment complex. It's maybe depressed some way, like it's fallen, fallen by the wayside, hasn't been kept up. Are there tenants living there when you do this? Is that correct?
Yeah, so there's a good question. There's actually all kinds of, our space is called the value add space. So we go in and we renovate apartment communities. There are all types of renovators in the business. Some do, as you're describing, they buy, call it a dilapidated, old, crappy apartment complex. We're actually a little different, and then we'll go and buy, our typical bread and butter is a property that was built in, say, 95 to 2005. Somewhat newer deal that just isn't maximized in terms of rents, and we'll go in and spend upwards of $20,000 to $30,000 per apartment unit, and the intent is then to take that rent level and have it tucked just right underneath new construction rents.
Okay, and so with you all, I was looking on your website, and you guys just have a ton of communities. So are you just constantly working on different properties everywhere then?
Yeah, so we've been blessed with very good growth, and it changes every day. We're buying and selling. A pretty big year for us this year. We bought 28 communities. We sold 12. For reference for you, if a company owned 28 deals, that would be a fairly large company. So our being able to buy 28 was a real win for the company.
So tell me how to get in on this. Where do I write the check? Do you take investors that are, like myself, who are like, hey, here's 10 grand. And is there a guaranteed return, or is there a maybe the sky's the limit kind of return? How does that work with investors?
Yeah, so anyone in real estate does not like that word guarantee very much because it kind of cuts both ways. But in general, our typical real estate deal at this point is about $100 million, and that's typically the way that we'll capitalize that, meaning the debt and the equity. Is we'll go in and put on, call it 65% of cost, because you have the purchase price of the asset, then you have the renovation dollars, and then you have all the closing costs, just like you were buying a house, but magnified, with it being a $100 million deal. And so all that develops cost. We'll put in, 65%-ish or so of debt. The remainder is equity. Typically an investor that can write a check that large is, they're fairly unique. So they're, the institutional providers, typically, you have pension fund advisors, large wealthy family offices that then work with other family offices, et cetera. They'll typically provide about, call it 90 to 95% of the equity. So 90 to 95% of that remaining 35%, if you follow me. Then the remaining 5 to 10% is yes, kind of friends and family, from ourselves or from friends and family or investors that have grown with us over time. We didn't always do $100 million deals. So back in the day, we do $3 million deals. And so those investors have grown with us. And so they still get to invest in our 5 and 10 million.
Interesting. Okay. So is the goal ever to hold the property and collect rents, or is the goal to find the property, rehab the property, sell the property? Is that kind of is that path?
Yeah. Goal is to buy property, renovate, sell. There are some properties that we'll probably go a little longer with. They're a little newer for whatever reason. there was an opportunity to buy that property at a competitive price that does not really need a renovation. For example, we took down one brand new property this year in Phoenix, brand new. And it had a neighboring property that we are closing on in February. And just luck of timing and luck of knowing the right people were buying those properties at a very, very competitive price. And so that
Why?
doesn't
Why are you
require.
buying at such a competitive price? Like the market's crazy right now. How are you getting
Yeah.
deals on these things?
Yeah. Well, one was we have an existing equity partner, and they were the equity in this development deal that was being built in Phoenix. And they know us, we know them obviously very well. And there's benefit to them if they know they have a buyer that can take some chips off the table and just say, hey, the day that we get this thing called final CO, meaning final certificate of occupancy, when everyone says, hey, we're done,
Yeah.
There's real value to them in knowing they have a takeout from their position. So that's where we come in and benefits us both.
Gotcha. So you had prepared a PowerPoint for me. You had some stuff you wanted to share with us. You want to go ahead and share your screen?
Sure. Yeah.
I was a property manager for an apartment complex in San Diego when I was right out of college. I got free rent. I remember thinking I was like the luckiest guy in the world. And I mean, the guy that owned the property was like, "You have no idea. You're doing all the work, man. I'm just collecting checks and playing golf."
Yeah. Being on the and we'll cover off on this in a minute, but being on the operations side is a very challenging part of the business for sure.
Right.
For sure. But so yeah, NightVest Capital. Here's my intro. Any questions so far? Just kidding. So I thought I'd give a little bit of just overview of the company. This is a little bit dated. We've grown a little bit since then, but we have 94 apartment communities, over 34,000 units. We're over 8 major metropolitan areas. So we're in the Texas majors. What that's called is, the large cities in Texas: Dallas, Fort Worth, Houston, Austin, San Antonio. We're also in Phoenix, Charlotte, and Raleigh. We actually have one outlier in Tulsa, Oklahoma. Probably won't have that much longer, and then we will be out of Tulsa, Oklahoma. It's just hard to manage one property far away.
Yeah.
So if you add up all the value of all of our properties today, something north of $5 billion.
$5 billion. Goodness gracious.
Yeah.
That is a lot of real estate.
Yeah, so it's fun. We've grown to, we're now one of the we're in what's called the top 50. It's the 50 largest owners of apartments in the U.S. and most of those owners are public, and so we're privately held, privately owned. So if you look at the number of privately held apartment owners, we're actually probably number 5, number 6 in the country. So that's pretty cool. So we're talking about investors, and we have, if you add them all up, we probably have about 300 of them with a total equity investment in the company of 1.4 billion. So big dollars, obviously very important.
Right.
We are what you call a fully integrated company, meaning some companies will go in and they'll buy a property and then they'll hire a third-party management to manage the property for them. We actually own our own management company. So we have asset management, property management, accounting, human relations, and construction. So
what's the advantage of that? Why not just hire a contractor and outsource that?
Control, cost, oversight, accountability are the main reasons. So when you have your own management company, you're not beholden to some third party that may have conflicting priorities. They may want to focus more on the properties that they own for themselves. They may want to focus more on a property owned by a larger owner than you. Who knows?
Right.
So here, kind of a saying: we manage everything we own and nothing we don't, and it just keeps everybody very, very honest.
Okay.
Yep. So, just real quick oversight of the executive team. So David Moore, who's a fabulous human being, was the founder of the company. Nathan Grider is our chief investment officer. I'm our chief operating officer. Mary Tyler is our controller, which is head of accounting, and Melanie Adams is head of our construction.
Okay.
I have multiple screens going, so I apologize. My cursor went away from me. This is kind of just a screen of what we do. And I'll go over this very quickly because we've already kind of covered off on this, but basically we seek to identify and reposition multifamily investments in order to unlock the asset's potential value. So in other words, we look for properties that work well with who we are and what we do. So we go in and we renovate. If we felt like a property was yeah, hey, maybe it's a great renovation candidate, but the rents are already so high, and if we go in and try to get another $300 for our courts upgrade program, that would put it above new construction rents. Actually, that's not a good candidate for us, so we will move on to the next. But I'll keep going here because we've already covered off on a lot of that. I thought I would give some.
And when you go in to buy a property, I mean, have you bought into an apartment that became a money pit? Has there been a situation where you're like, oh my goodness, I didn't realize, like, I mean, that it looked great from the outside, and then you got inside and you were like, oh no.
Yeah, yeah. Love to tell you that we have a flawless record, but the reality is you learn better sometimes from the mistakes. And we actually just sold this summer a deal in San Antonio that was the all-time night best loser. It ultimately did produce a 11% internal rate of return and a 1.8 multiple on investors' money. So they almost got 2 times their money back, but they literally got no distribution sent to them during the entire hold period, 5 years, I might add. And but at the end of the day, we sold it, and they got a nice chunk of change at the end. But it was painful.
What do you mean by that? So, like, during the 5 years, they were supposed to be getting a yearly or monthly sort of like payout?
Yeah. People are attracted to real estate for the distributions, amongst other reasons. And so, the desire is to have recurring cash flow. And so, because we're an alternative investment, people look at us exactly like that. We're alternative investment. My investment needs to spend and make money for me, and hopefully that drives a yield, a return on my money that grows over time. That's why we would do what we do.
Okay.
And in the case of this deal in San Antonio, we spent all the money and could not generate any meaningful revenue growth, and so we distributed nothing.
How do you what do you tell the guy that put in $100,000 and it's like, hey, I was expecting what is, if someone puts in $100,000, what should they be expecting, like monthly, yearly, what normally pay out?
Typically, well, you're asking 2 questions, so I'll answer your easier one first, which is, typically you start off your distributions at around a 5%. Usually organically, a property can pay about a 5% distribution, so $5,000 on the $100,000 scenario. Right. And then over time, that grows to, as you're growing your revenues and not spending as much on the property, should grow to, kind of 8 to 10%. By the end of the day, then you go to sell the property, and now you've gotten your money back, and you get some obviously meaningful profits from the deal if things have gone well. And so on the look back, it should be about a 15 to 18% internal rate of return, which is sort of like a time adjustment. I'm sure you guys have covered off on that.
Yeah. So I put in $100,000, and I would probably, on your average property expect $15,000 to $18,000 total over the life of my investment in there. And I guess the better you do for that investor, the more likely they're going to want to sign up for your next, property. You've got, you never want to end. You want to keep going with them and like reinvest it or whatever, right?
Yeah. Track record is very important. So if you look at our track record, we're a lot better than most of our competitors, and so that's attracted a lot of investment dollars to us. So believe it or not, our chief concern is not equity. Usually when we get a deal, we're not overly concerned about raising the equity. So for us, we've been blessed with good markets for sure, and we're in good markets, but we've had good execution, and so we have a good track record, and that helps. But
how do you track investors? Do they flock to you, or do you have are you out there promoting, saying, hey, we can get these kind of returns or whatever?
We've probably both. I mean, we, as we had to transition to the larger institutional investors, there certainly was a song and dance, if you will, to attract the new investors. And so that's what you're basically pitching, is your track record and what we do. And so a lot of what I'm going to show you today basically has been shown to other prospective investors, and that's how we attract them. But we have a good, we're blessed with a very good reputation. I think I don't mean this in a cocky, arrogant way, I promise, but I think if you asked almost anyone in this industry who is the absolute best in the industry and the gold standard on renovations, it would be us. And so
That's awesome.
yeah. And so I didn't build that, by the way. So I can say that it wasn't me that did it. And so I can say that really does attract a lot of investment dollars.
What does the average random guy like me put in? Like, do they come in with $1 million? Do they come in with $1,000? What's the average that they're putting in?
Well, it's all over, right? So, the employees here don't have a minimum. So anyone here can put in any dollars, and that's just a nice company perk. Right. But I would say, let's call it the friends and family guys that are not with the company. They're generally putting in, call it 200 grand per property. We've had some guys that put in $1 million, but usually probably about 200 grand. It's hard for us to do the $50,000 guy just because we have a kind of a perspective. Investors bring money, we bring the expertise. And so sometimes, the more investors you have, the more questions, the more time you spend and all that. And it's important, they're real dollars. And so that is really important. You never want to lose sight of that, but we also have to allow ourselves time to do our real day job too. So,
right. Yeah. Boy, that person is putting in, 30, 40, 50,000. That might be all that they have. So they are to be on you like daily, like where's it at, tracking every single step of where it's at and all of that.
Well, that's a really cool nuance to our business. So there's an old saying that if you really want to get a man agitated, you either impact his wallet or you impact his family. And if you think about what we do, we take people's wallets and put them to work where people live, where their family is. So times can be exciting for sure. So.
Right. Very good. Cool. So now these are some of the properties you've done.
Right.
And you've renovated these. It looks like there's a lot of, kind of a design and art. Like, it just feels like it's more than just walls and bricks and stuff. It's
yeah. So that's what's also very cool about real estate. So very rarely am I just sitting at my desk all day. Matter of fact, it's almost never. And I like that a lot. I just am not wired to sit in any one place too long. I like to be on the move. And so this is definitely a good job if you're wired that way. And yes, it's, you certainly get some time to nerd out and spend some time in Excel for sure. But there's a lot of just, walking properties and making sure we're doing our best. And so that's what's really cool about this industry. So yeah, so these are a few deals that we have put together. Most of these are what you call urban deals, kind of more downtown area deals, but Lofts West 7th is, downtown Fort Worth. That's a big mixed use deal. Mixed use meaning multiple uses of the real estate. We have the apartments and then there's ground floor retail. Think West Village, or think Legacy Town Center in Plano. Is that we own the apartments, if you think of it that way.
Yeah.
Fitzy Urban Flats is just east of downtown, and it's in a really cool hip area. San Simeon in Houston is arguably one of the nicest deals in Houston. Off Memorial, so really posh area. Heights West End is in the Heights of Houston. A lot of people that are young want to live in the Heights because it's just cool and has cachet. Portrait at Hans Park was one of the deals I was mentioning in Phoenix. It's a brand new construction deal we bought in downtown Houston. So these are some exterior shots, and we do a lot for the exteriors when we renovate them. So this kind of gives you an idea that when we buy a property, they're generally already pretty new and nice, and we just try to take them to the next level.
Okay.
But let me show you some interior shots, because this is also what we do. So as a matter of fact, let me go one more up, because I put these in order, or in bad order, but these are some before and after pictures. So believe it or not, same property, and it'll give you an idea. Can you see my cursor when I do this?
Yeah.
So this is a property right here that actually we bought in Austin, and the previous owner had, in their way, tried to go in and do a renovation. So they were calling this a renovation. And if you see, you've got a stainless refrigerator and a black oven and microwave, and kind I hope I don't offend anybody, because a lot, like if my wife saw all these, she'd be clamoring to redo our house. So, but that said, kind of got grandma's cabinets here, and
And,
you
and
know,
what does this do to change the rent? So if you're looking at the apartment on the right and the apartment left and the apartment on the right, what is it? Does it change it like from 1,500 to 2,000, or does it double the rent, or what does it do to for the property?
yeah. So call this $1,000 a month. These are one bedrooms. Call this 1,300 a month. It's about a $300 ad.
Okay, and
Yeah.
times 100 property, 100 units in a property, or
Times, so fun math for you. I'll grab my HP and I'll do this right now. So $300 times 12 is $3,600. Typically, you run about 95% occupancy, so times 0.95, 3420. And then we can talk about this, but we sell at a very high multiple. So I don't know if you guys have talked about buying businesses and the like, but if you
no?
say a business sells, a typical business will sell at call it a 5 multiple. You take your income times 5, and that's the price of the business. We sell at about a 25 multiple, so very, very high multiples.
Wow.
So if you take this 3420 times 25, we've added $85,000 per apartment unit just in executing this plan. So that's why what we do is it works so well. And so here below, this is a property we actually bought in Houston. Similar story, where if you can see, it actually has granite countertops, but it has kind of the old cabinets and no backsplash, mismatch appliances. And so what we do, and I should have let off with this, but we want the apartment to show to the resident in a way the resident walks in and goes, wow, I don't know everything I like about that apartment, but I know I like it. So it's our job to pick up on all the little details and make sure that at the end of the day, there's this package that all the residents love. So if you see, we do some fairly creative, funky things on backsplashes. We actually will do some funky things on cabinet pulls, and we try to create this kind of cohesive environment where people really just want to pay a higher rent for that.
Yeah.
And in today's world and the pandemic, where more people are working from home and frankly have more money to spend, we've been very blessed with very good rent growth by doing this.
Yeah.